Good morning, everybody. It's the 13th of February. We're Signal Centre Talking Ball. I'm Joe, joined by Steve. How you doing, Steve?
Yeah, not bad, thanks, mate. Not bad at all.
Good.
How are you?
Yeah, all right, thank you. Right, we're back to it. Another trading week ahead. Going to be a bit of a mishmash of a week. It's half term, and we've got a few bits going on. So Steve's off to Spain later today.
Yep.
Packed your sun cream, hopefully.
Probably not a lot of need for that, but
Oh, really? Weather
might
not
not
looking
get any.
great.
Well, I probably won't have a chance to sort of lay in the sun. It's a little bit more work than play, rather.
Of course it is.
Unfortunately.
Yeah. And I'm off to the Lake District, and I definitely won't need any sun cream because I think the forecast is rain. So yeah, it'll be me for the start of the week, Steve to the end. But let's get on with today, shall we? Let's take a look at the headlines that have been affecting markets over the past 48 hours or so. Let's just bring up them on the screen. So US consumer confidence edges higher. The University of Michigan Consumer Confidence Index recovered further to 66.4 for February from 64.9 the previous month and above the expectations of 65. There was a significant recovery in the current conditions component, but this was offset by a slight decline in the expectations component. There's been little change in the Fed rhetoric. The Philadelphia Fed president stated that January's jobs report didn't change the outlook for monetary policy. He added that the Fed needs to hike rates at least to 5% and stay there for some time. He also commented that the central bank was not likely to cut rates this year, but may be able to do so in 2024 if inflation starts ebbing. Risk appetite lost a bit of confidence over the weekend. It would appear the conditions have maintained a more fragile stance, with concerns that the US Federal Reserve will have to maintain a very hawkish policy stance to curb inflation. Also, increase in the US-China tensions surrounding the shooting down of objects also contributed to a more defensive policy tone, and equities lost some ground, with the dollar gaining some ground. We had Canadian employment on Friday. The labour market report recorded a very strong employment increase of 150,000 for January, compared with expectations of only 15,000. So that's a substantial beat there. We've had some pretty substantial moves also in Japanese yen as we opened on Sunday night and into today. The Bank of Japan Governor Ueda will face parliamentary hearings on Friday the 24th of February. Ahead of hearings, any policy hints will be watched very closely for further yen volatility being likely. And this week really is all about the latest US CPI read, which will be out tomorrow. Prices will be released around lunchtime tomorrow and will be extremely important for underlying market sentiment across all asset classes. This pretty much has been the number one data point of late, which is creating the most volatility. Okay, so let's move on to some charts. If anybody's got any requests this morning, please feel free to post them up on the streams. We'll do our best to cover as many markets as we possibly can and help set you up for the week ahead. Steve's going to kick us off with cryptocurrencies. I'll hand over to you, Steve.
Yeah, no worries. Let me just share my screen. Here we go. Bitcoin. This is a daily chart on Bitcoin. Let's just quick glance at the weekly for everyone who doesn't tune in each week. This is the weekly chart. We've got the big head and shoulders formation or double top formation, and we got the breakdown. We got the measured move target, which is a negative number, so we won't talk about that too much. And we've got the price action over the last couple of weeks. Let's focus in on that. We can see that we had this rally since the start of the year, quite aggressive January, very positive indeed. But we've stalled and reversed. We're reversing sharply from that rally. 24,258 is where we got up to. We didn't quite manage to test the 25,400 support, previous support, now resistance level. And we've had two consecutive negative weeks of price action. So really focusing in on the short-term price action, it doesn't look so rosy. We can see that we've formed a golden cross on the moving averages, which should be a positive thing. However, it looks like we're forming some sort of topping formation at the moment. The really looking for that 24,270 to sort of like act as maybe a buffer or something before the main resistance level. However, if we really drive down into the detail of the shorter term chart, we're back below the 4-hour Ichimoku cloud, which is negative. We're also forming some sort of bearish flag formation potentially. So really have to sort of keep an eye on this really. That will the cloud will act as resistance. If we do manage to get a breakdown, the potential is obviously for that to extend quite aggressively lower, and we would look at something like a target of around about the 20,100 level as a measured move. So watch out for that if you're involved in Bitcoin this week. The other coins, nothing really worthwhile mentioning there. All sort of seem to be following the major one. Let's take a look at gold again. Let's take a look at the weekly chart to start with. We saw the bearish outside candle from the week of the 30th of Jan. Last week was a bit indecisive, a doji candle, and we managed to post a new low compared to the previous 4 weeks, and spiked higher as well, and found resistance around about 50% of the body of that previous week's candle. A slightly negative start to proceedings today. This is obviously very much driven by dollar, which has rebounded slightly to the upside, and any further strength in the dollar should lead to a further correction down on gold. Looking at the daily chart, we drew a supportive trend line in on the daily chart, which was from the 23rd of November. We had multiple touch points on this interim trend, and we looked at this bearish flag formation that was forming, and we broke down through it on Thursday. That's Thursday's price action. Again, a bit of a doji candle on Friday, and really looking to see whether we've got any momentum to the downside for this to continue. The level of support that we're looking at on a short-term basis is 1852. Again, for our chart, we are negative, trending lower now. Negative. We're under the cloud, so that's a negative trend on the 4-hour chart, and we've got that. We'll draw that flag in again. Quite a nice flag. If we do manage to get a breakdown of that, we'd be looking at price action as a measured move target basis, looking for 1791. Other major support levels below, we've got, well, that's probably around about where we'd be looking. We did have 1865 was a level. We're trading around there now. If we do manage to get below that 1852, then we should open up the downside. There should be some sort of vacuum to take us down to around about the 1820 marker. Other markets to watch, crude oil. Let's take a look at that on the weekly chart. That was a much more positive week for crude oil after 2 previous negative weeks. Almost a bullish outside candle, not quite a bullish engulfing, but we've basically clawed back all the losses we had from the week before. So not bad at all for crude oil. It still overall remains negative. We're still below the major moving averages, the 100-day moving average, looking at cap prices at the moment, but a nice little bounce from this 6th of Feb candle. Resistance coming in at 82.61 on WTI crude oil, support really 72.58. So a nice wide $10 range to consider here. But overall, the trend and the downward momentum remains in place. Really, we are looking for this break to the upside, and that will be quite an explosive break because it does look like we're trying to put in this bottoming formation. Brent crude oil, similar sort of price action, obviously, different levels that we're really focusing in on. Around about the $89 level is the major resistance level, and below we've got support at 77.60 and then 75.26. So trading at a just over a $6 premium, $6.30 premium to WTI crude oil. Natural gas really trying to put a bottom in place. Last couple of days of price action, Thursday and Friday, were much more positive. We have the potential of forming a double bottom here at 268.70. That would lead to, the potential for that would be a measured move target all the way up to $3. So watch out for there. Good risk reward on that, really, because the stop is quite tight and it's quite clear where your stop should be, below 236. That covers it on the commodity side, Joe. Let's take a look at the dollar now.
Let's do that. Okay, so dollar. Decent rally over the last few sessions, so or last couple of sessions really. So we know prices moved aggressively lower following the completion of this top pattern. We drove lower. We found support at 101.29. We posted this piercing line candle, and a rally then ensued. So we've got short-term downtrend resistance, which is preventing prices from moving too much higher at the moment. We can look at Friday's price action and see that we closed well off of the worst levels of the session. It looks as though we have opened higher today and looking to push to the upside, but we have fallen a touch from the highs of the session, which is coming in at around 103.81. So we've got some resistance here to contend with. We've got the downtrend. We've also got this previous swing high that we posted back on the 7th of February. So unless we can break above that, we may see some sellers step in and try and force prices lower in line with this short-term trend. However, if we do get a break above this 103.96 level, then that could trigger further gains towards potentially a 38.2% Fibonacci retracement level of this entire down move. So that would just be kind of a normal correction within the grand scheme of things. And I'm not ruling it out because I still think that is a possibility. Given that we get seeing all these sort of geopolitical tensions, we've got the ongoing hawkishness from the Fed, we could see more appetite for the US dollar as kind of a safer haven play. So that's still on the cards for me. Let's take a look at Euro US dollar, expecting that obviously to be coming off, given that we've maybe got higher prices to come on Euro US dollar. We can see an engulfing candle was formed on Friday. We're below this support at 107.36. That's now capping gains from the reverse side. It was previously support and now acting as resistance. I've got some arrows drawn there to indicate that we may see a move towards 108.85. But we're below this level at the moment. So while that's the case, again, I think it could potentially be setting up a pullback towards a 38.2% fib level, which comes in at 104.60. If we can get back above this level here and close above 107.36, then that may trigger further gains towards 108.81. But for me, given that we've seen the break of this short-term uptrend, I think we are in corrective mode with Euro US dollar and can expect to see some lower prices. Looking at cable, we can see we had an attempt on Thursday at trying to move to the upside, but closed well off of the best levels of the session. Then we engulfed those gains that we saw on Thursday with Friday's session posting a lower close. And then we are pretty much flat as things stand at the moment. So again, given that we've seen a break of this short-term uptrend line, it looks as though we're in corrective mode. I've got these two arrows highlighted on the chart here, which possibly indicate the formation of a double top. It's only potential at the moment because the neckline of this pattern comes in at 118.42, which is this low here from the 6th of January. Still pretty much trapped in the middle, you would argue, of this range. So we need to see a break of that before we can start thinking about maybe even deeper prices on sterling versus US dollar. So at the minute, it looks as though it's going to remain in kind of range-bound fashion, but being, keeping in mind that there could be something a bit more sinister looming on the daily chart. Let's take a look at Aussie versus US dollar, see what's happening there. So we've seen a break of trend. Prices have failed to recapture the broken trend line. And while that remains the case, I think it heightens the possibility that there will be a deeper corrective mood, potentially towards that 38.2% fib level at 67.88. So we've got some big resistance here, as we can see, around 71.36 capping the upside. We've seen that break of trend. For me, it looks like we may see lower prices. Now, we have seen a pretty substantial move in yen currencies today. So things like Aussie yen really quite high, quite a bit higher. So we're seeing weakness in the Japanese yen, and that's being seen also in dollar yen. We've seen a break of the channel here. We saw a triangle pattern form here. We saw a big breakout of that on Friday, the 3rd of Feb. Throughout last week, prices were pretty range bound and choppy, but we've seen a nice pullback to retest that triangle pattern, forming what looks to be a bullish hammer candle, and we're backing that up with further gains today. already up by 0.62%. That's looking pretty positive indeed. So again, we'll be looking for higher prices, and the first target on the upside would be this 38.2% fib level at 136.66. Let's take a look at New Zealand dollar, US dollar, just to round up the majors. So again, like Aussie, we've seen some major resistance form here. We've seen a break of trend, big impulsive move down that we saw on Friday, the 3rd of Feb. And since then, the bodies of these candles really have been pretty much exactly the same throughout this period. So that's very strange indeed to see that kind of price action, but indicates that there is seemingly resistance in place at around 63.25. Yes, there's been a couple of spikes above it, but on a closing basis, very, 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 very tight ranges on this at the moment. We're talking, what, 22 pips? I mean, that's tiny, right?
That's not a lot, is it?
No. So waiting to see what happens there, but it looks undecided at the moment. But I think given that we've seen the break of trend, we are looking for a deeper correction. Potential for a double top to form and a breakthrough 61.91. Shortly below that, we've got the 38.2% fib level at 61.31. Okay, on to a couple of requests. Going to take a look at dollar Swiss. That's one of the majors I didn't get to, so let's get to that now. So this is the daily chart. So talking about potential for dollar to have a bit of a move higher, bit of a correction to the upside. Looking at dollar Swiss, we can see prices have been contained within this bearish channel now for some time, really going back to kind of November. We have made a sequence of lower lows and lower highs, but potentially we are going to test the upper boundary of this channel and also a key resistance that I've highlighted at 92.90. So if we can get a break above that level there, then that could trigger a pretty decent correction to the upside in the short term. You've got to imagine it's probably a fair amount of short interest along this period here. So a breakout would, all that pent up sort of short action that we've got in here would have to be unwound, and we could see a decent move to the upside. If we're taking a look at sort of targets, then let's take a look for fib levels. So we've got 38.2% fib level coming in at 94.78. So that would kind of be the first upside target, I think, on a breakout of this channel. So potential for a decent move higher. Of course, if it continues to fail here and we post some sort of major reversal over the next couple of days without threatening the upper boundary of this channel, then we may see a move back down to maybe test the lows. But I think my bias here would be for a break to the upside. Going to take a look at sterling CAD now, and my view hasn't really changed on this. I talked about it last week when it was requested. I think we're in the process of maybe forming a double top here. You could argue that we confirmed that last week with Friday's price action, a very bearish candle indeed, engulfing all of the previous day's gains. A bearish outside candle, in fact, we formed there, and a close at new lows. But today we're trying to hold on. We're trying to hold on to this major support of 161.02. I think that pretty much the move has completed here, and therefore I would be looking for lower prices towards 153.58 on sterling CAD, given that I think we've completed this double top. Yes, we may get some sort of pullback, and I think I'd expect that to be capped at around 162.02. Let's take a look at the intradays and see what's shaping up here. We can see there's been a mild correction off of these lows. Obviously, this was Friday's price action, a big move to the downside, a little bit of a corrective channel forming at the moment. So if we get a break down through that corrective channel, that could indicate that the sellers are ready to take charge again, and we would expect a break lower. We've got some fib levels of this move down that may provide some opportunities to get short, but I think my bias now is for, as I say, for lower levels here. So I'll be looking for any opportunity that I can find really to get a short on, and maybe it's going to be a break of this short-term corrective channel. What else have we got? CAD yen. Let's take a quick look at that. Let's go to the daily first. So obviously anything linked to yen is having a pretty substantial move today, given that we've got a fair amount of yen weakness. They're talking about a new a new governor being in place from the 24th of Feb. So it looks to be here as though we're trying to form some sort of bottom on CAD yen. We can see there was a massive reversal on this on Friday. That was also helped by the fact that we had the employment numbers from Canada, which came in much better than expected. We remember we were expecting 15,000 jobs, and it came in at 150,000. So that would have helped Canadian dollar. And obviously with the weakness that we're seeing in yen as well, potential here for a bottom to form. We've got resistance very close by at 99.26. So if we can get a break above that red line there, yes, we do have some resistance levels up here, but that would be the short-term target. And potentially we could even do a measurement of this short-term bottom and project prices probably even a bit higher still than those levels. Let's just do a rough kind of drawing on here. I'd be going by a break of that line there. So that would indicate a move maybe up to around 103.86. So starting to look quite positive here due to the factors that we've got of strength in Canadian dollar and weakness in Japanese yen.
Nice one.
Cool. Steve, do you want to take a look at indices? Looks like there's also a crypto request in there.
Yeah. Just before I go into indices, I'll take a look at this crypto request Polygon Matic USD. So taking a look at the weekly chart, we can see the price action since this has been charted. It's March 2021. And we can see the sell-off, obviously, from the all-time highs back down into this corrective channel that we're getting. Now, on the weekly chart, we highlight quite a key level, 130. So we flirted with that price last week, actually, the week of 6th of Feb. We could see we jumped up through it. However, on a weekly basis, we formed a bit of a shooting star candle. So that's a little bit of a concern. Also, if you drill down to the daily chart, there's signs maybe we are having this top in formation, and this goes back to Bitcoin that we talked about earlier. It feels like this rally could have come to an end. Not going to write it off completely yet, though. And we can see this head and shoulders formation, something like that would have a measured move target down to 103.36. Trading, as I say, around 120. Break it down to shorter term time frames, we can see 4-hour chart just breaking below the Ichimoku cloud, so that's negative as well. And also just the hourly chart, just give you a little bit more of a sort of closer look at the swing low that we saw on the 9th of Feb, which got down to around about 120. We're breaking through there now, so doesn't look great. Obviously there's plenty of decent risk reward if you want to fade this sell-off. We have sort of like seen the move since Sunday night, and early Sunday morning rather, and this break here is quite significant. You know, trade, if you want to trade in from a risk reward perspective and you're sort of like selling the break here, then your stop needs to be up at the 130 level that we were talking about. But obviously if you're looking to buy this, the stop has to be pretty tight. I mean, you've got to really have the stop around about 117, which is the swing low from the 6th of Feb. That's the short term on Matic. Diving into indices now, the one that really sort of stands out for me a little bit is the Dow. We've got this like triangle formation at the top. It's almost like a diamond formation where you take this rally here. So we're looking for a break either way, and we've obviously rallied up into this level. However, the last couple of days have been sort of like pretty nondescript, really, can we say? Sorry, a couple of weeks. Monday the 30th Jan week and Monday the 6th of Feb week, or both dojis indecision at the highs here. So are we coming to an end of this rally? I mean, you've still got the overriding. You need to see the break really, and need to see where we get the close. If we get a close below that triangle or above it, or and yeah, so on the daily chart, we're seeing the 55-day moving average flattening off. We're seeing quite a nice engulfing candles forming, and it does feel again like we're getting this top in formation, although Friday's bullish hammer will go against that. On the 4-hour chart and the 1-hour chart, we're battling with the cloud itself. So we've sort of seen a quite aggressive sell-off Thursday. We bounced Friday, but only managed to get halfway up through Thursday's price action. So quite a, I don't know, quite a sort of indecisive one really. Resistance coming in at 33,900. For me, that would be key. If we do get up there and hold, that resistance, then I would say chances are we have formed a little bit of a short-term top. We're going to retrace. On the NASDAQ side of things, price action last week was negative overall, but we obviously have had that January rally, which puts us in quite a good position at the moment. So still overall slightly bullish, but the last few days of price action haven't been that way, and we are getting down to the real previous resistance, which should provide some sort of support around about the 12,000 level in NASDAQ. S&P on a daily basis, I got stopped out of this. It did spike lower, closed around about where I got in on the gun to head on Friday, but I'd been stopped out. And again, we've had a little bit of a flirt down this morning, down to 469, and we've rallied back to 485. So overall, on the US indices, we're looking a little bit like we're having a pause, but no real sign of where to next. FTSE hanging around its all-time highs. That's still looking pretty decent, although the momentum seems to have stalled. We can see that the average range has dropped off a lot as well. So shooting star candle, hanging man candle, doji candles. So not looking like it's ready to explode higher, but also it's holding these levels. So until it breaks 78.50, I'd still be quite positive on FTSE. DAX, however, that has formed a bit of a evening star formation. You got this small rally. The reaction higher, we got up to a high of 15,656 before Friday's price action, which reversed lower, and we took out last week's high that we formed a new low high on the week on Friday. Got down to 15,238. This morning we've been down there but bounced. Yeah, just the bulls are battling with this one. For me, the 15,270 is key. I'd go short below it and stay with it above it. But again, are we seeing a topping formation? It's quite. We need to see more price action, I feel, Joe, this week. So there's nothing really massively evident on the charts to tell me either way where you should sort of like put your bets on this week.
Yeah, it's a choppy start to the week, that's for sure. So obviously we're all kind of gearing up towards this CPI number tomorrow as well. So I think it's going to be a challenging start to the week. But let's move on anyway. Let's look at the gun to the head challenge. So this is where Steve and I pick trade ideas live on the stream, in the hope that we can turn a profit between now and 9 o'clock UK time. So we are actually managing a live account now. We started off the year with £2,000 in a trading account, obviously small amounts of capital, but just trying to showcase our ideas in real time and try and help out newer traders or guys that are also operating with smaller account balances. So the idea being that we come up with these ideas as if we had a gun to our head. We must have risk reward ratios of better than 2 to 1 on these ideas, and of course have stops and targets. We close these ideas out automatically at 9 o'clock UK time, or when the stops or the targets are reached. Now we can take a quick review of Friday's ideas. Steve's already given you a bit of an indication about what happened to his. He was trading S&P. Let's just bring that up now. We can see that Steve was buying the dip, but it spiked him out just by a couple of ticks before coming back and actually closing at 9 o'clock, pretty much where he got in, but no prizes for that, unfortunately. And I was looking at selling EURUSD. Bit of a breakdown here, and it was rallying into resistance. So I took that opportunity to sell it, and wish I'd had a bigger target, to be honest, because it just sailed through the target level that I had, which was only a 2.1R return, I think 2.12 when you account for costs, etc. So yeah, a win's a win, but clearly I could have done much better on that. But I traded the plan, and can't complain really.
No, nice one, Joe.
So 2 new trades coming up. Steve, you got anything ready, or do you want me to have a look at something?
If you've got something ready, go. I'm sort of looking at the indices, and I'm actually sort of on the shorter term basis. I'm actually thinking we've got a couple of days maybe before CPI. Was it Wednesday?
Tomorrow.
Tomorrow, so Tuesday. We've got the day before it. Like, maybe we'll get a little bit of positivity coming in. It seems that the indices seem to have got off to a little bit of a positive European start. So I might sort of like go with it and back the 4-hour chart, which is finding some support at the cloud.
All right, well, you try and set that up then. I'm going to take a quick look at a couple of sterling markets that are taking my fancy. So first up, I'm looking at Aussie, sterling Aussie. So it looks as though we've got a big head and shoulders top here. We've rallied into the neckline of late. And today, if we look at today's daily price action, we can see a pretty swift reversal at that level. Excuse me. So looking at that on the daily, looking at it on the intraday, it looks like it's over the last hour had a pretty big knock to the downside. So I was hoping to try and maybe sell that a bit higher. So I'm struggling with either doing this one, and if I'm going to target a move lower, it's probably got to be into those lows there, which doesn't give me great risk reward. So maybe the other one to look at is sterling CAD. But again, that's kind of, although I think it's completed a double top on the daily, just coming back to that again. If I look at the intraday, I'm kind of waiting for this to maybe form some sort of bearish flag. But it's bouncing from the lower end of that channel at the minute. So it's causing me a bit of stress as to whether or not I go with that or sterling Oz. I think I'll go with sterling Oz just because on the daily it has, definitely completed the head and shoulders. And if we look at the daily candle today, then that kind of suggest that we are going to see lower prices. It might mean I just need to tighten up my entries a bit to get better risk reward. So I'd like to sell that, Steve, at 74.05 if you're able to get that on for me.
Yeah, have a look, mate. 17,405 trading now. Your stop is?
It's going to be 74.51.
Yeah.
And my target is 72.74.
Gives you 2.9 to 1. Is that right?
Yep, up do.
There we go. That's on, mate. You've tightened that stop right in, haven't you? So
yeah, I mean it's still 50 odd ticks, 47 ticks. So
yeah,
it's reasonable.
Should be enough, shouldn't it?
I hope so. So Steve's got that on for me onto the Oanda account. You can see at the bottom of his screen, he's got the Oanda live there, and then we're on with sterling Oz. So let's see how that goes. Account balance at the minute 1970. So we started off with 2,000. We're down about 30 quid, which, as we know, is only one good winning trade. So let's hope we can get that today and put that back above where we started. Over to you, Steve.
Yeah, again, I'm in an R-ing, okay, between DAX and I'm sort of going against, you know what, I'm the big bad bear when it comes to indices. I love to sell indices because you get a lot of panic when they do break down. But I'm really sort of like trying to pick out one. The one I'm looking at really is S&P again. I think I'm going to go for it, Joe. I'll just go for something around about here. Again, I know I like to keep the stop a little bit tight, maybe too tight in some respects. But really looking for maybe getting up to that sort of levels on the day. Maybe I can tighten the stop up to a 20 tick stop. Is that too much? Probably something like that. I'll go for something like that. So let's put the trade on. Create new order. I'm looking to buy at market, take profit, stop loss. So my stop loss is at we're up here, aren't we, Steve? Stop loss is at 40.65. Let's see what. Let's go for 40.60. I'll go for 40.60, and the target would be I'm going to go 3 to 1. Oh, wrong figure. What am I doing? Yeah, looking at the 3 to 1 risk reward. Get that on before I change my mind. Did that go in? Oh, filling the order wasn't possible because you can't add insufficient margin. Oh, that's possibly why we've got to put a 1% risk in.
Did you have it?
So how about that? I think I tried to do it in £1,000,000 or something, Joe.
Oh, bloody hell.
Come on, let's get some more leverage going, whatever.
No.
So yeah, that's Yeah, it seems to have sort of. Oh yeah, the stop is down here, isn't it? There we go. That looks a bit better.
Yeah, so we are risking 1% per trade, 1% of our trading capital per trade, which we didn't say at the outset. So pretty strict in terms of risk management, and that's generally the approach that we suggest that people consider. Obviously, if you have a period of winning trades and you're risking a certain percentage of your account, then you can benefit from the impacts of compounding over time. Whereas if you just pick a fixed amount, obviously that can mean that your losses can become much bigger in a percentage basis anyway than your account over time. So various ways of obviously managing risk, but that's our preferred style. Steve's got that trade on. He's buying S&P 500, and we'll get these posted up to our trading view profile as well. So if anybody wants to check them out or follow them throughout the trading session, please feel free to do so. Okay, let's round this up, Steve, with a quick look at the data that's due out for today. In fact, there's nothing on the calendar of high impact. Tomorrow, we've got UK labour market report. That's out at 7 o'clock UK time, so before we come online with the stream. And also tomorrow on Valentine's Day, we've got the US consumer prices. This is the big number that everybody's watching. It's pretty much the main market mover at the moment in terms of economic data. We'll be watching that live and obviously assessing the impact. So we are expecting some fairly substantial volatility. So be aware and consider that when you're coming up with your trading plans for the week ahead. Okay, Steve, let's leave it there. I hope you have a very safe journey to Barcelona. I'll be back in the morning, and Steve, you'll be back with us on Thursday. Is that right?
Yeah. I'll try. I'll see if I've got time to pop in at any point while I'm out there. But yeah, if not, I'll see you Thursday, because we're an hour ahead out there, aren't we?
Yeah.
So yeah, I'll see if I can jump on.
All right. Cool.
When I'm out there.
Good to
All right.
see you.
Cheers.
All right. Have a good one. Bye.
Bye.